Hello traders everywhere, Adam Hewison here with your midday market report for Wednesday the 21st of August. Okay, this is what we're looking at today. We think the Dow is close to a buy zone, which is into 61.8% correction, Fibonacci correction, and also we think it's time to buy Netflix if you're not long already on Netflix. We're looking for that to run up to $300. We'll show you our trade triangles on Netflix right away. So let's go to our portfolio, and right on the top we have our Netflix, which is down today, down about almost 2%, but it's also in an area you probably want to look to buy. So let me just show you what we're looking at. So here's Netflix. Here's the big move to new highs, took out the old high. We like that. This pullback, to be honest with you, I think is a normal function. And if you look at this for the end of the week, if we're closing over 270, I think it's a very positive sign, looking for this market to go to 300. If we scope this out to max, you'll see that this market has actually been up to 300. So it's not something that's out of the ordinary. And we could easily see, as I say, a move just over the $300 range again. So very, very bullish on Netflix. So let's move on to our next market. We'll go back to our portfolio, and that's the Dow, and we put a Dow in there, and I'm going to just scope this in closer because we want to see. Here's the 61.8% correction. We're right in that zone now. I think we could see a rally from current levels. We are very, very oversold. Not to say it can't go lower, but the reality is this is where the market should begin to make that support level and make the turn. We may want to see, if you want to be a little bit more conservative, just wait until you have maybe a couple of days here so it stabilizes and then starts to move up. But this is an area we believe you should be looking to purchase the Dow. So let's see how that plays out, but this is going to be our 6th day down in a row. Pretty unusual to see that many days down in a row. And I think given the fact that we're getting close to the end of the week, we could see a rally back up to 15.1, 15.2 and actually close out the week maybe unchanged. So let's see how that plays out. But going on to our next market, that's going to be the S&P 500. You can see this market is actually sort of stabilizing a little bit. There's not so much pressure that's been on the Dow is showing up on this market. So technically we think this market's going to be pretty much in the zone. We want to see our weekly turn up, but it hasn't turned up yet. We want to see this scope around a little bit before we do anything in this market. So moving on to the NASDAQ. The NASDAQ is obviously a different animal altogether. It's still a minus 70, so in a trading range, but nonetheless this market sort of stabilized a little bit thanks in large part to Apple and some of the NASDAQ components. So generally speaking, I want to give this market some time to regroup, but we are still bullish longer term based on our monthly green trade triangle. So moving on to our next market, that's the crude oil. Big pullback in the crude oil. Let's put a Fibonacci in there, and how you do that quite easily is just click on this little icon right here. You get the yellow box here, and you simply scope down to this level right here. So we're pretty much back into an area where the market should find support. One of the things we talked about before in this market, if you may remember, is the fact that we have tried to get through this area on several occasions, right here, here, and here. So we haven't been able to do it successfully. We need to go through that area, and I'm not sure what's going to propel that, but right now we seem to be in the sort of rather large trading range, and you can see that in a larger trading range, which is I think more to the point here. So just kind of like we're in this range here, and we're likely to stay in here until something dramatically switches the picture into a more positive picture for crude oil. So let's move along and go to our next market. And the next market we're going to be looking at is going to be the gold. Now gold, if you remember, we're really not that bullish. We still think it's a trading range. It's a 55 plus 55, which is a classic trading range. We're sort of losing a little bit of momentum here. You can see this is sort of going down a little bit, but nonetheless, I still think that gold this is a rally in a generally secular bear market, and we'll see some sort of pullback and a retest of maybe these lows or even these lows. So right now we've got our major trend still down, the intermediate trend is up, and the very, very short-term trend is down. So it gives us the 55, which is a trading range. So moving along to the euro against the dollar, you can see we actually closed over 134 yesterday, which is very exciting. Came right back down today. Kind of a, if we scope this out even further, it's kind of, we need to see something really solid, a couple of solid closes over 134, but nonetheless the dollar isn't doing particularly well in this scenario. So let's see how things work out. That's Amazon. We talked about Amazon. I think over 290 is going to look really, really good. We're getting very oversold here. The market's beginning to lose momentum here, downward momentum, so I think this is going to be an area. Watch the 290 level either this week or next week, but if we go over there, we're going to see this market once again head towards the 310 level. Hey, this is Adam Hewison for Market Club. Thanks for stopping by. If you did see Street Signs yesterday on CNBC, I appeared as a guest there. I think you may enjoy that. You can see that on today's blog post, and there's a link there to the video. And I'll be back tomorrow. Have a great trading day, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.